Welcome, and I'm Jill Steele, Director of Law Skills Limited, a company which enjoys working with leading legal minds. And in that role, of course, I do a lot of training, but I'm also looking for innovative products and services which can enhance the delivery of a law firm's work and products to their client base. And in that respect, I've been delighted to discover a new set of products offered by Tower Street Finance, a company which offers loans and borrowing to various parts of the probate service. And I've been looking at the problems of the lockup of assets within an estate, 2 billion at any one time, which are waiting to be released pending getting a grant of probate. And Tower Street Finance, I've come across, offers a range of services which can help with both that problem and other problems too. For example, if you need money to release the inheritance tax, then maybe we can explore with Dickie and Rachel the different ways in which their products can help. I'm joined by Rachel Brooks from Foot Anstey in Southampton, and also Dickie Davis, who is the business director with Tower Street Finance.
Thanks, Jill. Yeah, I totally agree with you. A lot of probates get slowed down because of the liquidity issues, and we need quick and easy solutions to be able to release funds from the estate. And I think, Dickie, that's where Tower Street, as I understand it, can help.
That's right, yes, we do have an IHT loan, which is designed for situations where estates are asset rich, cash poor, and you have the conundrum where an executor needs the grant of probate to get the hold of the assets to sell to pay the IHT, but you need to pay the IHT to get the grant of probate. So our IHT loan was designed to solve that problem.
And is it easy to apply for that?
Yes, so an executor or the person applying to become personal representative applies for a loan in their own name. If it's a professional executor, then a named person applies for the loan. There's no liability on that executor or personal representative. The funds are paid directly to HMRC, and the loan is repaid out of the assets, the proceeds of the assets, when the estate is distributed.
So this is quite handy, isn't it, Rachel? Because you must come across a lot of cases where you've got plenty of assets, a lovely big house, lots of private company shares, but not so easy to get enough money together in order to be able to fund that IHT even with the instalment options. So it's quite useful, because I think you had an example, Dickie, of where you had an estate where this was a big problem.
Yes, so we recently did one where the estate was over 10 million and it was majority of shares. I think it was only about 500,000 of property in the estate. The IHT bill was 3 million, 1.6 in cash and liquid investments, and there was a 1.3 million shortfall. So we funded that through an IHT loan. The executor didn't have any other option.
Because these days we can't go to a bank, can we? I mean, I can remember the days when actually we go to our own bank and ask them to lend us money to lend to the client. All that's gone. No way can we act as bankers. So it's really tricky to find a source of funds to help in these situations.
And can you lend for the entire amount, or is there any limit as to how much you would lend towards the IHT bill?
We lend up to the amount that's required to release grant of probate, whether that's a balance or the full amount. Yes, but there is no upper limit to what we can lend.
And I'm assuming the solicitors involved or the executor PR needs to produce a certain amount of information for you to make the decision.
That's right, yes.
You can't just anybody get it.
That's right. We rely on the executor to instruct the person managing the estate to provide us with the information, and we're after is the same information that they're gathering as part of their process anyway. The information they need to complete the probate and IHT forms is the same information.
So from a solicitor's point of view, who's acting as agent for the executors or personal representatives, they would be asking the PRs to give them authority to release this information. And then basically once they've released the information, how long does it sort of take you to put the money in play?
As soon as we got the information, it's very quick. We did one a few months ago where we had the full information through about 10 p.m. on Monday night, and at 10 a.m. on Friday morning we cleared the IHT bill. And that was involving 3 properties and some investments. So it's reasonably quick.
So I suppose the $64,000 question is, how much does this wonderful arrangement cost?
Well, the charges are, there's a 2% arrangement fee, origination fee, but that's capped at £1,500, and that can be added to the size of the loan. And then there's a 1.5% interest cost per month, which again is rolled up and paid out at the end. So the all-in APR is 22%.
Right, right. well, as a way of unlocking the assets, it's certainly something to be taken into account. Wouldn't you agree?
I agree, and I think also when you're dealing with a probate, you've got certain time limits, you've got to get the grant within, and if it can help and simplify some of that process to do that, it takes some of that worry away of sort of scrapping around to find assets to settle the bill.
Estates often get delayed, and perhaps the word is hijacked by a dispute raising its ugly head. And many of you will, of course, know that disputes can arise because the will is challenged. It might be there's a formal mistake in the will, or it could be that there's been undue influence, there's fraud, all sorts of reasons. And quite commonly, people have a go on the basis of testamentary capacity being lacking and the deceased not knowing what they were doing. But whatever the reason for the dispute, and it could be that someone is desperate to get more from the estate than they'd been given by way of making Inheritance Act claim, nevertheless, someone who might have a legitimate reason for wanting to do that, perhaps they're a second wife who hasn't been properly provided for, something like that, then they might be put off, or indeed, as along with many people think they have no ability to make a claim, could be put right by a solicitor who they consult, who would say, well, yes, you can make a claim, but obviously there'll be costs involved. So basically, what goes on here, if you have a product, how does it work, Dickie?
So the product we have here, inheritance dispute funding, does what it says in the tin, allows beneficiaries who believe they've been not left enough in the will or been left out of the will entirely to fund a claim. Unlike other products, we don't rely on counsel's opinion up front. We don't require them to get that, or a third-party opinion. We rely on the solicitor's opinion on the case. We will fund the cases where perhaps the beneficiary's been left a certain amount of money, but they think they're due more, or there's a valid 1975 Act claim. We won't fund cases where someone's clearly trying it on, because we leave those to the no-win, no-fee guys. That's their business. And we work with the solicitor. The money is advanced to the solicitor. The person applies for it directly, but the bills are paid directly to the solicitor. And again, it's the same as all our other products. There's no personal liability, no credit checks, no charge of any property.
And is it only probates that you advance for the dispute loans, or does it go for trust litigation as well? Is it just the wider?
No, it's all different,
litigation.
All litigation, yeah, all different types of claims, as long as they're, because it works on the principle of the funding will be repaid by the inheritance. As long as we can see a clear route to the beneficiary having an inheritance proceeds out of the estate, then we'll fund any claim.
Could be very useful, because sometimes you get cases, don't you, where the parties aren't really in disagreement, it's just that the will is unclear, and so you need to go to court to get a satisfaction to protect the PRs, if nothing else, to make sure that the interpretation that they're going to go with isn't going to cause them personal liability for wrongly distributing the estate. So yes, some beneficiaries would lose out by one interpretation, but they might be willing to go with it. But of course, if it's got to go to court, there's a dispute, so presumably you'd fund that just the same.
Yes, we would. We work with the solicitor up front to work out what the level of costs are going to be, projected level of cost using a simplified Form H, Schedule H, and then assess what inheritance the beneficiary is likely to get, and then lend off the back of that.
I was going to say, how did you assess how much to lend?
I think it's quite interesting, because we're seeing definitely, I think, a lot more conflict coming up in estates, and I think there is also an assumption by a beneficiary that their fees will automatically be paid from the estate or from the fund, which of course it may well be in due course, but you've got to fund it to get there, haven't you?
Absolutely, yeah, definitely.
Yeah.
And of course, you've always got to be careful, and that's your judgment, I guess, as to whether the money will come out of the fund in due course, because sometimes if people have misbehaved in the litigation, they have to fund the costs themselves.
Yeah, no, we will fund, as long as we are concrete on the case, we'll fund 100% of their costs. And the point you make is interesting, because the rise in blended families these days makes it even more likely there's going to be more claims. And in the last year, there's been a huge rise in the number of online DIY wills, which are fraught with difficulty, because, as you guys know, in law, the definition of a child is only a blood child, not stepchildren. If someone leaves a DIY will with money to their children, they're excluding their stepchildren.
It will be fascinating to see in hindsight just how many people made wills without taking advice during COVID, won't it? Because there was a huge increase in wills during COVID, done through professionals, but online wills and things like that. And also the rules that came up were very weird, that allowed us to do a different way of executing wills. And frankly, I know a lot of people who act in disputes have said they would automatically challenge those wills, which means there's going to be a lot of these cases. You're going to be busy, Dickie.
It's a difficult area, isn't it? Because having a will is better than no will if you've got particular sort of requirements and how you're going to leave your inheritance. But with DIY online wills, say people are just leaving themselves open to challenge.
They are. I was at a conference once which was chaired by Lord Faulkner, and we were talking about wills as part of the debate, and it got to a point where he and I were having a bit of a standoff, and it was over the question of doing your own will. And I said to him, well, go ahead, if you want to take your own teeth out, use a manual. I don't have a problem with that, but, don't expect me to pick up the pieces. And it became viral, this thing about... So there's plenty of people who might be wanting to do their own will, but I don't think we'd normally recommend it.
Yeah, I was very interested actually, Dickie, in the new testamentary expenses product that you've been looking at, because what we're finding increasingly is estates again becoming liquid because there's only a house, say, very large property, and you can't sell it for quite some time for whatever reason. But there's still a lot of expense that needs to be dealt with over and above paying the inheritance tax. And those need to be funded, and you've obviously thought about a solution for that.
That's right, yes. Through our research with the other products, talking to customers, there came up quite often, categories of expenses that they were having to fund. So things like the funeral costs, professional fees, valuation surveys, that kind of stuff, house clearance, house update, insurance. And so we designed the estate expense funding product, our most recent product, just to cover those. So an executor or personal representative, again, can apply for funding to cover those costs. And again, they are paid out by the estate.
And is there any limit on what you would lend for? Can people come forward to you and say, right, this is what we're trying to fund, or do you consider that?
Yeah, we would fund anything that could be classed as a testamentary expense, so that the cost involved in the proper sort of execution of the estate, and anything that is expense to maintain the value of the estate at date of death. So if there's a hole in the roof, you can repair it. If you've got to change the locks, you can do that. My favourite example is if you don't like the avocado bathroom suite and you want to change it, then that is enhancing the value of the property, so you can't cover that.
Now, I had an interesting one the other day where a surviving spouse was living in the house, but it did have a mortgage on it because unfortunately the deceased died quite young. And we had a big debate about whether the payment of the mortgage was actually testamentary expenses, because at the end of the day, if they didn't preserve the house and the mortgagee repossessed, would have lost an asset. So would that be something that you would also consider?
We would consider covering that, because the value at date of death included the mortgage, and if that mortgage is surviving, then the interest on that has to be paid. Otherwise, the mortgage company will eat up the value of the estate with nothing left for the beneficiaries.
So your testamentary expense definition, being rather loyally about this, may be slightly wider than what we would by law define as a testamentary expense. Is that, would I be correct in that?
Yes, right, yes. So we'll look to the solicitor who's managing the estate to give us their opinion about, okay, in my view, the executor is carrying out their proper duties, and in doing so, this is what they have to fund as and can't be challenged by the beneficiaries in managing the estate properly.
And the same sort of terms, I guess, for this loan apply as you set out at the beginning, goes through all the loan documents, does it? Okay.
Yes, the same thing. There's no liability, there's no charge over any property, there's no credit check, and it's paid at the end of the process in priority to distribution to the beneficiary.
I was going to say, because it's slightly different timing, isn't it? In that obviously it could be ongoing throughout the estate administration, so it's when we're actually coming to the conclusion that we'll be repaying that loan. Of course, as soon as could be done to keep the interest down.
And in you pay that first before you would make a distribution or pay any legacies, that sort of thing, would
correct,
you?
Correct.
Yeah.
So testamentary expenses form that sort of senior layer of debt, if you like, in the estate before anything's been distributed.
Yes. In a recent survey, 42% of the population said that they didn't realise how long it took to administer an estate. Of course, all you professionals know that we need at least 12 months, the executor's year. And that reason for that year is because, of course, we have things to finalise, such as the disputes that we talked about earlier, where people can make that claim within 6 months of the grant. So we can't distribute too soon. So even though we've got a straightforward estate, it could well be that a beneficiary is desperate for some funds. It might not just be probate delays at the probate registry. It might not be the sort of things that I've just mentioned. It could just be that they're really keen to get some help because they're paying for care, or they've got school fees, or they've got some kind of worry that's troubling them. So could it be that somebody could turn to you, Dickie, at Tower Street Finance and say, well, what can you do to help me, a beneficiary, in those sort of situations?
Absolutely, and that was the reason why we launched our first product, which is over a year ago now. The Inheritance Advance does what it says in the tin. It allows beneficiaries to get hold of their inheritance earlier. We did a lot of customer research before launching, spoke to a number of beneficiaries, and over a third of people said, if this was available, I would have taken advantage of it. And since we've done some more customer research, which showed, and backed up the figures you said, a lot of people just don't realise how long the process takes. And it's not that people are being difficult, it just takes that long to do it, at least that long.
So I suppose Rachel and I would say to you, well, what on earth do we have to provide in order to get this advance to beneficiary? Let's get the roles sorted out. So it's the beneficiary who's asking for the money. It's not the PRs now. We're not talking about the IHT bill or anything like that. So this is now a change. It's a beneficiary asking. So I don't know, Rachel, what do you think? The solicitors are going to ask, well, why should we be doing this?
I think absolutely. And it's obviously, I'm sure, something you've considered, but it's not the client of the solicitor who will be releasing information, and it's the beneficiary who's come forward and said, well, I want this. So how is that being structured within your products? Because obviously the solicitor is going to say to the beneficiary, I'm terribly sorry, I need to take my client's instructions, rightly so.
Okay, that's right, yeah. So obviously in many cases beneficiaries and executors are one and the same, but in the cases they're not, then the beneficiary has to be able to get the executor to instruct the solicitor to provide us with the information. Without that, we can't lend, because you're right, the client is the executor, not the beneficiary.
If the client itself is let's say it's a solicitor executor, it will be a solicitor executor, and they're approached by a beneficiary, what is the risk for them? It's slightly different from your other products, isn't it? Because the inheritance tax testamentary expenses is assisting the executor in the administration of the estate. But the executor might feel, well, by releasing this information to give this, am I at risk? Is there any impact for the estate by the beneficiary doing this?
No, there's not. So there's two elements there. One in terms of the information, then we're just after the same information that the solicitor's gathering anyway. We don't ask for it to be warranted or anything because we know it can't. We do our own checks on that. So there's no liability from that point of view. And then in terms of the estate funds, then each beneficiary individuals, we assess each beneficiary's individual inheritance or the proceeds. And it's just that we look at for advancing the money to the beneficiary. So it doesn't affect any of the other beneficiaries in the estate. So it's just individual. So we can have, if there's an estate with 4 beneficiaries, we can do advances to all 4 of them individually. But it doesn't affect the other ones.
So from a solicitor's professional point of view, let's say we are an executor, and let's say we are aware that one of the beneficiaries is in difficulties financially. How do we approach telling them about your product? Because we can't sell it to them. We can't actually introduce it, can we? We've got to be very careful from a financial services point of view.
Correct. Because it's an FCA regulated product, then the act of introducing the product is credit broking. And we just ask that the solicitors or probate administrators provide a copy of our brochure to the customer if they express an interest, and provide the details back to us. That's it. That's all that's required on their part. So it's just provision of details of the product and details of the customer back to us. That's all it is. That's all that's required.
And it's important then, if the beneficiary has discovered this product quite independently of the solicitor's firm who's involved, that the solicitor's firm doesn't start making comments about the product too, isn't it? Because that's then making an opinion about a financial service product. So it's an important product, but you've got to be careful not to introduce it incorrectly or dismiss it incorrectly.
Correct, and I'm sure can guess, we've had situations where we've had solicitors trying to dissuade people from taking out the product, and that is straying into the realms of providing financial advice. The other situation that we come up against sometimes is that probate administrators or solicitors may tell us that they're aware of the situation of the executor, but may not know the beneficiaries. And we say, well, the beneficiaries are the ones who may need the money. That you may not know their individual financial circumstance, and quite often from our research, people won't admit to wanting the money until it's offered to them. So all we ask is that the solicitor sort of make them aware that the product is available and then pass them the details, and that's all they need to do.
What would happen if, for example, it all goes through, beneficiary gets a proportion of their hoped for inheritance, and then there's a claim on the estate, and then suddenly they're not getting anything at all? Okay. What happens in that point? Okay,
so we'll get the information on the estate, the same information that the solicitor is gathering for IHT and probate. We'll do our own assessment. Once we've underwritten the loan and made the advance, any changes to the estate after that are our risk. So if another will comes to light, or another beneficiary comes to light, the assets sell for less or take longer, or another creditor comes to light, that's our risk. There's no personal liability, and there's also no liability on the solicitor. If there's not enough proceeds to distribute, again, that's all our risk.
So where an advance is made, and let's say it all goes along hunky-dory, and the estate is coming to the conclusion, are you expecting the solicitor presumably to refund the loan from the assets that have been realised? So there's no money going via the beneficiary that then might not get back to you?
No, that's right. So because the loan is structured as an assignment, so they say there's no credit check, there's no charge, so our security is the proceeds of the inheritance. So the beneficiary signs an assignment agreement, so they assign their rights to the inheritance to us, so we effectively become the beneficiary. Yes. And then when it comes to repay the loan, we'll let the solicitor know the repayment proceeds, they repay us, and the balance of the inheritance is automatically reassigned back to the beneficiary. So there's two transactions, one to clear the advance and the interest and fees, and the residual back to the beneficiary.
Mm-hmm. Is there a limit of how much you can borrow? Can you borrow pretty much 100% of what you think you're going to inherit?
We limit that to 60%, right. just to allow for the interest and sort of the sort of valuation of the assets.
Yeah, because the estate is going to be moving the whole time, and there could be other debts and things that come in. Yeah, so it gives a bit of a buffer room. Yeah.
Well, this has all been really interesting, Dickie, but of course none of us can really guess what someone's personal situation is until it presents itself. So what happens if the individual, be it the estate, the executor or the beneficiary's circumstances, don't kind of fit to the criteria we've been talking about?
That's interesting, because one of the things we say internally is we do not have a typical customer, and as you guys know, every customer situation is different. And how we like to position this is we're here to solve problems. So just come and talk to us about a particular situation, be it the beneficiary, the executor or the solicitor, and we look to solve the problem. It may even be the case, we've done it already, where perhaps it's more than one product is required to solve the problem, and we can do that.
And what sort of feedback have you had from firms, law firms that you've been partnering with so far? I'm assuming positive.
So the feedback we've had already is that two things from the solicitors. One, they didn't know the product existed. It's not a surprise because we've only been going a year. And secondly, that no one's thought of the product before. When we get into working with them in terms of managing the process, they realise actually we're quite easy to work with because we're after the same information they've gathered anyway to complete the probate and IHT forms. We're actually quite easy to work with.
And does that engage the solicitor in any extra cost in the administration of the estate to provide you with the information that you need?
So there is a bit of time involved in providing us the information, and what we now do is ask for them to just complete a report form, and we will pay them for the time in doing that.
So therefore it's cost neutral to the estate. So that's really great, isn't it? Because as a solicitor you're given a quote at the beginning and you've got to pretty much stick to it. So this is an extra cost and it's covered. And
doesn't impact other beneficiaries who are not having this same sort of product, taking advantage of it, aren't they? So you're right, there's no cost to the estate, and we also pride ourselves in making quick decisions.
Okay, well, we've explored together some really interesting products produced by Tower Street Finance. I hope we've interested you in this product because I do think it's a product to consider when you've got any of these sort of problems we've discussed. So, good luck and good hunting.